Welcome to our Hong Kong Brief Show. I'm your host, Jenny. Today, we're kicking things off with some exciting stock market news. Hong Kong stocks snapped a 4-day losing streak and jumped slightly, thanks to the U.S. employment data that hints at a possible rate cut by the Federal. The Hang Seng Index rose by 0.3%, and tech stocks enjoyed a boost too. Meanwhile, in mainland China, markets had mixed results, with some big names like Alibaba dipping, but overall, the mood is optimistic about future rate cuts. Next up, let's talk about Saudi Arabia. The country has recently relaxed property laws, making it easier for foreigners to buy property, including Hong Kong and Chinese investors. With attractive prices, high rental yields, and exciting infrastructure projects, Saudi Arabia is positioning itself as a new hotspot for real estate investment, possibly rivaling Dubai's success. It's an interesting time as the kingdom aims to attract wealthy investors and boost its economy, but it might take some time to fully catch up. Finally, some law enforcement news. Hong Kong Customs recently seized 20 kilograms of suspected cannabis buds at the airport, arresting 2 passengers from Bangkok. The authorities are cracking down hard on drug trafficking, and they're also working closely with e-commerce platforms to prevent illegal items like smoke grenades from entering the city. Plus, the Customs Department is establishing an armed escort team to speed up the destruction of confiscated drugs and combat rising smuggling activities. Please stay tuned for more details. South China Morning Post reports a rally in Hong Kong stocks, snapping a 4-day losing streak driven by optimism over potential U.S. Federal Reserve rate cuts. The U.S. job market data revealed a weakening labor sector, with job creation falling short and unemployment rising, fueling speculation that the Fed might cut interest rates by as much as half a percentage point in September. This anticipation lifted the Hang Seng Index slightly, along with the tech sector, as investors searched for signs of economic easing amidst a backdrop of cautious geopolitical and domestic political developments. Meanwhile, major Asian markets mostly declined, reflecting global uncertainty and the absence of significant stimulus measures following a Politburo meeting in China. In the realm of real estate, South China Morning Post highlights Saudi Arabia's emerging potential as a major destination for property investment, akin to Dubai's success. Recent legal reforms allowing non-Saudis to purchase property in designated zones, coupled with the kingdom's ambitious Vision 2030 plan, are attracting interest from Hong Kong and mainland Chinese investors. With significantly lower property prices compared to Dubai and attractive rental yields exceeding 6.75%, Saudi Arabia is positioning itself as a lucrative alternative for wealthy families and institutional investors. The country's ongoing infrastructure projects, such as Neom and King Salman Park, along with relaxed residency rules, are expected to boost liquidity and demand, especially among high-net-worth individuals seeking diversification and new opportunities beyond traditional markets. Lastly, the same publication details Hong Kong Customs' efforts to curb illegal sales via e-commerce platforms like Pinduoduo and Taobao. Commissioner Chan Tsc-tat explained that the department is actively engaging with these giants to remove banned items, such as smoke grenades, following incidents involving minors. Despite the complexities posed by multiple parties in the supply chain, Customs aims to strengthen compliance through cooperation, including filtering prohibited goods and addressing intellectual property infringements. However, enforcement remains challenging, especially with cross-border smuggling methods like raw meat shipments from Shenzhen. The department is also considering legislative improvements to better handle cases involving prepaid services and counterfeit products, emphasizing the importance of cooperation from brands and companies to protect consumers and uphold trade integrity. The South China Morning Post vividly reports on Hong Kong Customs' urgent measures to tackle the growing drug crisis, revealing a clandestine storage of over 6 tons of illicit substances like cot leaves, mitragynine, and GBL, some of which have remained hidden for up to 8 years. Commissioner Chan Tsc-tat shared that the department faces a staggering backlog, with some drugs taking nearly 35 years to be destroyed under current procedures, due to limited disposal slots and the need for police escorts. To combat this, Hong Kong Customs is establishing an armed escort team and collaborating with the Environmental Protection Department to streamline the destruction process, potentially saving millions and reducing the destruction timeline from 35 to just 5 years. This bold move underscores a commitment to law enforcement innovation and national security, with officers trained to operate weapons comparable to police units, illustrating a proactive approach to safeguarding the city from the menace of illegal drugs. Meanwhile, the same source highlights an alarming surge in cigarette smuggling, with customs seizing 200 million illicit cigarettes worth 1 billion Hong Kong dollars in just the first 5 months of 2025, a staggering 425% increase compared to the previous year. Commissioner Chan emphasized the department's determination to clamp down on this illicit trade, deploying new measures such as a laser label scheme to prevent counterfeiting and displaying live arrest figures at border crossings to deter potential smugglers. The government's recent tobacco duty hikes have temporarily boosted smuggling activity, but Chan remains optimistic that the trend will stabilize as the market adjusts, asserting that increased enforcement and public awareness are pivotal in curbing this lucrative black market. In stark contrast, the South China Morning Post also reports on social issues, detailing the urgent call by domestic worker unions for a 30% wage increase to 6,500 Hong Kong dollars per month, citing the silent famine caused by inflation and inadequate food allowances. Representatives argue that current wages and subsidies are insufficient for helpers to meet basic nutritional needs, with some working abroad for less in real terms than 2 decades ago despite their vital contributions to Hong Kong's economy. The coalition demands not only higher wages but also the implementation of standardized meal provisions to ensure decent living conditions. This plea underscores ongoing concerns over fair labor practices and the need for policy reforms to protect the rights and dignity of Hong Kong's essential domestic workforce. South China Morning Post reports that Chinese biotech companies, notably Innovent Biologics and BeOne, are on the cusp of turning profits by 2025, signaling a significant milestone in the industry's evolution. Innovent, which pioneered weight loss and diabetes drugs in China, is expected to report its first-half net profit of approximately $36.4 million, driven largely by sales of its GLP-1 weight loss drug Mazdutide. Meanwhile, BeOne, specializing in oncology, anticipates a full-year profit of around $109.5 million, fueled by the success of its blood cancer drug Zanubrutinib in Western markets. These companies have historically relied on licensing deals with multinational partners, generating billions in upfront revenue. However, uncertainties remain due to unpredictable milestone payments and regulatory challenges, exemplified by the US FDA's rejection of Innovent's lung cancer drug Sintilimab. Despite setbacks, Chinese biotech firms are increasingly creating value for patients and government payers, with industry analysts highlighting their maturation and potential for sustained profitability. The South China Morning Post also details the volatile weather patterns affecting Hong Kong, with heavy rains and violent gusts disrupting daily life. An active southwest monsoon and upper air disturbances prompted the Hong Kong Observatory to issue an amber rainstorm warning, which was later cancelled after heavy showers caused over 60 millimeters of rainfall in parts of Kowloon and the New Territories. The city faced potential flash floods and gusts reaching up to 90 km/h, prompting safety advisories for residents to seek shelter. However, the weather forecast predicts relief as the monsoon moderates, giving way to hot temperatures reaching up to 33 degrees Celsius by Friday. The shifting weather patterns highlight the ongoing influence of climate variability on urban life, with authorities emphasizing the need for vigilance amid the unpredictable storms and heavy rainfall. In a compelling story of resilience, the South China Morning Post features Hong Kong rugby star Rosie Wright, who was determined to overcome her third ACL tear and return to international play. Wright's injury occurred during a match in April, after which she underwent an intensive and painful surgery using a quadriceps tendon graft, her most excruciating yet. Despite multiple setbacks, including 2 previous tears and surgeries, she draws inspiration from athletes like Rebecca Andrade, who triumphed over similar injuries. Wright remains optimistic about her recovery, emphasizing the importance of patience and honesty with herself as she prepares for the 2026 Asian Games. Her leadership role and dedication to supporting her team reflect her unwavering commitment to overcoming adversity and pursuing her rugby dreams, even amid the physical and emotional toll of repeated injuries. South China Morning Post reports that Standard Chartered is set to revolutionize its approach to young investors in Hong Kong by launching a cutting-edge digital platform. This innovative tool aims to cater to the tech-savvy generation that prefers self-directed trading over traditional face-to-face consultations with bankers. The platform will enable users to research and trade a diverse array of assets, including stocks, funds, and alternative investments, aligning with the bank's broader strategy to attract affluent clients and expand its wealth management footprint. As part of a substantial $1.5 billion investment over 5 years, this initiative underscores Hong Kong's importance as a key market, with the bank also planning to open its 6th wealth management center in the city. The focus on digital transformation is driven by impressive recent financial results, with Hong Kong contributing significantly to the bank's record first-half profit, fueled by an 8% increase in affluent clients and a 35% growth in net new money from high-net-worth individuals, despite potential headwinds from low interest rates and a cautious economic outlook. The South China Morning Post highlights Hong Kong's booming wealth management sector, which is poised to fuel a surge in hiring and office expansion. The city's private banking assets under management soared by 14% in the first half of the year, with the total reaching 10.4 trillion Hong Kong dollars, and private banks hiring over 400 wealth management professionals in just 2 years. Major institutions like HSBC, Standard Chartered, UBS, Julius Baer, and DBS are all ramping up their operations, driven by a 50% increase in transaction volume last year and a rising number of high-net-worth individuals, now totaling around 850,000 with assets exceeding $10 million. The sector's growth is further bolstered by government initiatives such as the Wealth Management Scheme and the Capital Investment Entrance Scheme, which have attracted billions of dollars and increased cross-border investments. With Hong Kong's strategic position as a connector between mainland China and international markets, the city is expected to solidify its status as a global wealth management hub, especially as digital assets and cross-border schemes gain prominence amid geopolitical uncertainties. The South China Morning Post also describes Hong Kong's recent success in hosting the Hong Kong Football Festival, which has rekindled the city's reputation as a major sporting event destination, rivaling its famed Rugby Sevens. The festival drew large crowds, including international clubs like Liverpool, Arsenal, and AC Milan, with over 160,000 spectators attending matches in Kai Tak Stadium, which boasts a vibrant, energetic atmosphere and state-of-the-art facilities, including impressive air conditioning that enhanced the experience for players and fans alike. The event's popularity has sparked optimism about making such football festivals an annual tradition, with major clubs expressing interest in returning. The festival's success not only invigorates Hong Kong's sports scene but also boosts its tourism and international profile, echoing the city's passion for world-class events. Despite some criticisms, such as pitch quality issues, the overall sentiment among players and organizers is that Hong Kong's stadiums and hospitality infrastructure are top-tier, promising a bright future for the city's sporting events and its ambition to become a premier global sports hub. South China Morning Post reports on Jeffrey Sachs's perspective on the U.S.-China tensions, emphasizing that U.S. saber-rattling could inadvertently trigger conflict. Sachs highlights that the U.S.'s aggressive trade policies, such as tariffs and export restrictions, have failed to halt China's rise, which is driven by its own ingenuity, strategic planning, and investments in green and digital technologies. He warns that U.S. rhetoric and military posturing, particularly its attempts to maintain dominance, are dangerous and could lead to a self-fulfilling prophecy of war. Sachs advocates for China to diversify its markets beyond the US and Europe, focusing instead on Africa, Southeast Asia, and Latin America, and recommends expanding regional collaborations like the Belt and Road Initiative. He envisions a future where global leadership is multipolar, with China playing a central role in technological and economic development, while U.S. policies remain fragmented and driven by the deep state, which perpetuates a cycle of conflict and dominance. Sachs also warns against the U.S.'s protectionist tendencies, such as the One Big Beautiful Bill, which he criticizes for increasing inequality and retreating from leadership on climate and innovation, thus unwittingly empowering China. He underscores that the U.S.'s foreign policy is largely dictated by entrenched institutions rather than presidents or public opinion, making meaningful change unlikely in the near term, and cautions that aggressive U.S. rhetoric could escalate into war, especially given the current global geopolitical climate. Meanwhile, South China Morning Post covers Son Heung-min's tearful farewell at Tottenham Hotspur's friendly match in Seoul, marking his emotional departure after a decade with the club. Son, a beloved captain for both club and country, received a standing ovation from over 64,000 fans as he was substituted off, fighting back tears. His announcement to leave Tottenham has sparked speculation about a move to Major League Soccer in the United States, with fans and teammates paying homage to his contributions. The match itself was a spirited 1-1 draw against Newcastle United, with Son's former teammate Brennan Johnson scoring and mimicking Son's iconic celebration. The emotional farewell was overshadowed by concern over a knee injury sustained by James Maddison, Tottenham's star midfielder, which could impact the team's preparations for the upcoming season. The scene encapsulates Son's significance in South Korean football and the global football community, highlighting the end of an era for the beloved player whose influence extends beyond the pitch. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.
Got a book so big and bright, open it and take a flight. Learn about the stars and sea. Everything is here for me. Flip the pages one by one. Knowledge under the sun. From dinosaurs to galaxies, a world of endless mysteries. Encyclopedia, yay. Facts and fun all day. From A to Z, let's see. Curious minds run free. Jump into the pages deep. Secrets that you want to keep. Time will fly and you will find magic lies in every watch our minds all start to grow. Encyclopedia, yay! Facts and fun all day. From A to Z, let's see. Curious minds run free, yeah. Jump into the pages deep, secrets that you want to keep. Time will fly and you will find magic lies in every line. To run free line, every line's run free. Animals and history, science full of mystery.